Good morning. It is February the 2nd, 2018, and this is probably the biggest news day of the month as far as scheduling goes. There won't be an FOMC announcement in February. So this could be it. Given some unexpected news, that's a different deal. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, the non-farm payroll number and the FOMC meetings tend to freeze the markets. There will be stops below 121. The market has sold heavily into this news, so the trade with the most potential is a long before the news is announced. Naturally, that carries risk. My guess is that the non-farm payroll number will come in higher than the 175. But the market's certainly not acting that way. Unemployment at 4.1, that's probably pretty solid. Earnings at plus 0.3. That one's been all over the map. Could be higher, could be lower. Work week 34.5. They will double check that after the unemployment hits. And the non-farm payroll number. Manufacturing jobs at 18K. They are looking at that now. Consumer sentiment at 95. That one could come in higher than forecasts. The University of Michigan's inflation, 2.8%. That's a pretty healthy number. It's 0.8% higher than what the Fed is forecasting. Factory orders will be the next big piece of news. And then Baker Hughes rig count. Never know what it is. It was 1285 last week. And 947 for the U.S. So don't be surprised to see higher numbers in both categories because of the price of crude oil moving up. This will be the first news that the market reacts to. The factory orders will be the second, and perhaps consumer sentiment. There's no way to really know the news with 100% certainty. The trade carries extra risk. The potential is to the upside because the market has been heavily sold into this number. Without news, we would be trying to sell 5s to 9s and 11 to 15. On the buy side, without news, we'd be trying to buy 29s to 01s and 21s to 25s. We'll go over the newsday trade right before the news hits, what is involved, and you'll have a good feel for how the newsday trade is done. Basically, we enter the market, post the news at the mode or mean, then if the range is not extended on the retest of whatever the high or low is, we exit the trade. It requires a nimbleness. You got to be fast, and you may not want to put that kind of pressure on yourself. And if that is too much, you wait 3 or 4 bars and you start to trade development. Gold, the bond, the euro will react, and the Emini to this news. Crude is the easiest play, is the least impacted by the unemployment news. 8 to 12, number 1. Sell 15 to 19. Again, this is without news. 23 to 27. On the buy side, 28 to the buck, 1 by 21.25. by 9 to 13. Looking at gold. Hope everybody is having fun. We've had a great week so far in February as trading goes. I mean, it's just, we've got volatility in the stock market. It makes it worth looking at. Consistent volatility. We've had 4 days of it, so it's been, that's a new thing. That, I guess the Emini traders out there got their Christmas wishes. Okay, the London high was 51.30, say 51.50, 52. And you can see that there's reasonable selling above 52 right here. We're currently at 48.60, so we'll make 51.53, sell 1, 55.57, sell 2. On the buy side, trying to trade lower here. Again, this would be without news. Buy 1, 45.47, 40.42, buy 2. Okay, if the unemployment numbers are lower than forecast, the euro rallies. If they're higher than forecast, the euro usually sells. We got a seller at 25.50, and we probably have a buyer at the buck as we open up this morning and start trading. So without news, last rotate up was 31. We're at 23, so got to give it a little room. Sell 1, 40 to 50. Sell 2, 75. Right up against resistance. On the buy side, 125 even, buy 1. 24.75, buy 2. We do have news. And the euro looks like it's pointed lower, perhaps on the guess that the non-farm payroll number is going to come in higher than forecast. That would be my guess. Now, doesn't mean I'm right. But just from a potential standpoint, the euro has rallied into this news, so being short would be the trade that would have the most potential. And that's how markets work. They get overextended one way or the other. And if you have inside information or more than a little grit, you can fade those moves, and over time you will prosper. But on any given trade you can get your head handed to you, and most of us don't like to do that. Okay, crude ran into trouble again above 66, so 65.75 to 66 is sell 1. 66 and a quarter, 66.50 is sell 2. And last night we were trying to sell 66 and a quarter, and the high was 31. Did we call that or not? On the buy side, pointed lower, so 65.25. We don't get stops below 50. 65.50 buy 1. 64.75, 65 buy 2. Okay, the selling in the stock markets around the globe has been blamed on higher interest rates, the break in the bond market. Why take the risk of stock markets that are overbought when you can make 3% on your money, or whatever it happens to be? And as interest rates, back when interest rates were 5% on average, the portfolio adjustment to accommodate interest rate moves balanced portfolios, etc., was did impact the market. Because interest rates have been so low, nobody's really paid attention to that for the last 4 or 5 years. So what's the E-mini going to do? Let's go to our F1s. Actually, let's go to the bar chart. Essentially, we had 1 day of selling, pause, 2 days of selling. Right here is the break in the market at 27.75 on the assumption we can get through 2800 as far as the bar chart is concerned. You got that low at 69, got that high at 79, so that would make 77.74 right down just off the bar chart, where we would expect some pretty good support. If we look at our F1 screen, 92 is a low volume number. Say 85 is a high volume number. Then the low volume number is down here at looks like 63. So the market has sold, and it is lower overnight. The high was 28.80. We got down to 97. In a strong bull market, 50 to 70 points is where you would expect the pullbacks to hold. I think we're probably transitioning into consolidation right now, with the still have an upward bias based on this economic strength. We don't know where the low is, so 150 points pullback plus or minus, usually in a bull market when it's paused, is contained. Sometimes it gets a little deeper, but usually about 150. So we busted 70. 150 would take us down to the 27. 30 area, way down here off the map. So we've got a lot of potential support on the way down. Again, without this morning's news, if we were looking for a place to sell the E-mini, and because the market has been so heavily sold, the trade would be to be long into the news. But we would be selling 6 to 9s and 12 to 15. Give it a little bit of room, and on the buy side you'd be buying 28 even, 28.02, buy one, and make it 93, 95. Let them get stops below 95. This is without news. Yeah, the bond guys are selling and will sell. I mean, they know interest rates are going higher. They don't know how much higher they're going or how fast they're going to go higher. But yeah, the bond guys are working the bond market over really well. So, and if we can get a rally, I think the rally will be sold into in bonds. Why? Because the Fed's raising interest rates. The bond guys trade fundamentals. Gold. Okay, it's going to take a bit to get everything moved around, up and posted. I'll be there. We'll be live for the non-farm payroll numbers. We'll try to get off a market Newsday trade in both the bond and the E-mini. You have to be nimble. You have to move. We'll see how she goes in a bit.